Hello everyone, how are you all? I hope everyone is fine and doing wonderful. Today we are here for the second part of discussion for RTP for CA Final Financial Reporting paper for May 2023 attempt. Already we have uploaded the first part of RTP discussion in which we have already discussed from question number 1 to question number 6. So in this RTP discussion for May 2023 attempt, we will be discussing from question number 7 onward. I hope whatever we have done in question number 1 to question number 6 you have understood, correct? And if you have not listened that video, first you listen that video, then you come to second part. Okay, so can we start with the question number 7? Now let us come to first question number 7. Question number 7 is based on Ind AS 115. Similar question is already asked in exam, already given in ICAI study material, correct? But expected question, once again such question can be asked. Let us first read the question. Correct? Yes, sir. So question number 7, you can see company X enter into an arrangement on 1st Jan 2001 with a customer for renovation of hospital and install new air conditioner for the total consideration of rupees 50 lakh. So total transaction price is 50 lakh. The promised renovation service, including the installation of new air conditioner, is a single performance obligation satisfied over the time. So what they are saying, the promise of renovation of hospital and the supply of air conditioner will be considered as single performance obligation, means they are not separate performance obligation. Total expected cost of 40 lakh including 10 lakh for air conditioner. The total cost is given 40 lakh and out of the 10 lakh is the cost of air conditioner, means other cost means which is related to the renovation of hospital is 30 lakh. Company X determined that it act as a principal in accordance with Ind AS 115 because it obtained control of air conditioner before they are transferred to the customer. So the entity itself is acting like a principal, they are not the agent for supply of air conditioner. The customer obtain the control of air conditioner when they are delivered to the hospital premises, means can I say the customer is also receiving the control of the air conditioner before renovation of hospital, Company X use an input method based on cost incurred to measure its progress to a complete satisfaction of performance obligation, correct? As on 31st March 2001, other costs incurred excluding the air conditioner are 6 lakh. So what they are saying, other costs already incurred is 6 lakh, means total cost incurred will be 10 lakh for air conditioner and for renovation of a hospital is 6 lakh, correct? So can I say, we can say that out of total cost of 40 lakh, we have already incurred 10 lakh for what? Air conditioner and 6 lakh for what? The renovation of hospital, means 16 lakh has been incurred. Whether the company X should include a cost of air conditioner in measure of its progress of performance obligation, how should revenue be recognized for the year ended 31st March 2001? Now what Ind AS 115 says that for measuring the progress of performance obligation there are two methods, one is output method, one is input method. Normally we use input method. In input method, normally the input method is based on cost to cost method, correct? Means in measuring the progress of satisfying the performance obligation, normally we use cost to cost method. Now what Ind AS 115 says that whenever cost incurred is not proportionate to the progress of satisfying the performance obligation, then revenue should be recognized to the extent of cost incurred, correct? If four conditions are satisfied, means in this case you can see the cost of air conditioner is not proportionate in the progress of satisfying the performance obligation, because 10 lakh is already incurred and till now we have not started the renovation of hospital, means whatever cost has been incurred for the air conditioner is not proportionate to for the measurement of what performance obligation. So what they are saying, in this case revenue will be recognized to the extent of cost incurred if four conditions are satisfied. Four conditions are satisfied. What are that four conditions? First condition, that goods do not represent a separate performance obligation. So in this case, can I say air conditioner does not represent a separate performance obligation because both the supply of air conditioner and the renovation of hospital is considered as single performance obligation. First condition is satisfied, correct? Second condition is what, that customer will obtain the control of the goods before receiving the services. So in this case also, can I say the customer has received the control of air conditioner before renovation of hospital. Second condition is also satisfied. Third condition is that the cost of goods will be significant as relation to the total expected cost. So in this case, can the cost of air conditioner is 10 lakh, which is significant in relation to total expected cost, that is 40 lakh. Out of 40 lakh, 10 lakh relate to what? Only the cost of air conditioner. Understood? Correct. And the fourth condition is that entity entity will purchase the goods, means purchase the air conditioner from third party, and they are not involved in what? Designing or manufacturing such goods. So in this case, can I say entity is acting like principal and they purchase the goods from third party and they are not involved in designing or manufacturing of such air conditioner. So all the four conditions are satisfied. Therefore in this case, can I say the cost of air conditioner will not be included in the total cost for measuring the performance obligation, and the in this case the revenue will be revenue for the supply of air conditioner will be calculated, means will be equal to the cost incurred for that. Are you getting? To revenue for the supply of air conditioner will be recognized to the extent of cost incurred. I hope you have understood. Correct. So in this case, what we'll do, just try to understand. In this case, you can see what is the total cost. Total cost they have given how much? That is 40 lakh expected cost. Out of this, how much relate to the AC? AC is what? 10 lakh. Correct. And for renovation of hospital, it is how much? 30 lakh. Have you understood? Now total transaction price is what? 50 lakhs, means total transaction price for recognition of revenue is 50 lakh. Now for AC, revenue will be recognized to the extent of cost incurred, means out of 50 lakh, revenue for AC will be 10 lakh only, means balance will be related to what? For renovation of what? Hospital. I hope you have understood. And what is the cost incurred? Cost incurred is what? 10 lakh of for AC, and 6 lakh has been incurred for what? 6 lakh has been incurred for renovation of hospital, means total cost incurred is what? 16 lakh. What is the percentage? Means because this 10 lakh, whatever cost incurred for the supply of air conditioner is not proportionate to the is not proportionate for the progress, is not proportionate to the progress of satisfying the performance obligation. Therefore for that will not be included in the total cost for calculating the progress, for measuring the progress in satisfying the performance obligation. Understood? In this case only 6 lakh will be considered. So 6 lakh divided by 30 lakh, how much it is coming? Can you calculate this? 6 lakh divided by how much? 30 lakh is equal to how much? 20%. This will be equal to 20%. Means now revenue to be recognized will be how much? It will be 40 lakh, which is the revenue for what? The renovation of hospital. Out of that 20% we recognize, and for AC we recognize revenue to the extent of cost incurred. I hope you have understood. So this become 8 lakh plus 10 lakh, that is how much? 18 lakh. And the cost incurred is how much? It is for this how much incurred? 6 lakh. And for supply of air conditioner how much incurred? 10 lakh. The total cost incurred is 16 lakh. You can see the profit whatever will calculate, that will be 18 lakh minus 16 lakh, that will be equal to 2 lakh. Have you understood? This will be equal to profit. Very simple question, but you need to write down properly in relation to the concept, in relation to provision given under Ind AS 115, then only you will get the marks. Have you understood the solution? Correct. Let me come to the solution. What is given? Come to the solution. You can see para, there is no need to write down para number in your exam solution. You write as per Ind AS 115, an entity shall exclude from an input method the effect of any input that in accordance with the objective of measuring progress do not depict the entity's performance in transferring control of the goods or services of to the customer. In accordance with the above, the company X assesses whether the costs incurred to procure the air conditioner are proportionate to entity's progress in satisfying the performance obligation. The costs incurred to procure the air conditioner, that is 10 lakh, are significantly relative to the total cost to completely satisfy the performance obligation. Also, company X is not involved in manufacturing or designing of air conditioner. Company X conclude that including the cost to purchase the air conditioner in measure of progress would overstate the extent of entity's performance. Consequently, in accordance with India's 5, you can read it. Correct now. It is very simple. Means you can write down that 4 conditions, whatever I have said. If you can add that much, you will get marks. Correct now. So you are not supposed to write the solution as whatever is given in suggested solution. Just I will say relate with the concept given under India's 5. India's has given that revenue in that case will be recognized to the extent of cost incurred. 4 conditions are satisfied. You can just write down that 4 conditions, relate with the case, and then give the answer. You can see now the answer is what? Revenue for renovation work is 40 lakh. That only I have said. 20% they have calculated. 6 lakh divided by 30 lakh. That only I have said. Yes, sir. Now you can say revenue, what they have calculated, 18 lakh. That is how much we have calculated. Cost of goods sold will be 16 lakh. That only we have calculated, and profit is equal to how much? 2 lakh. Understood? Have you understood? Simple. Got it? Now let us come to the next question. Can we come to the next question? Yes, sir. Come to question number 8. Now question number 8 is based on India 16. Very simple question, similar question we have done in class also. It is not a difficult questions. Correct? Company X built a new plant that was brought into use on 1st April 2001. The cost to construct the plant is 1.5 crore. The estimated useful life of the plant is 20 years, and Company X account for the plant using cost model. The initial carrying amount of plant included an amount of 10 lakh for decommissioning. So this 1.5 crore include 10 lakh for decommissioning liability, which was determined using discount rate of 10%. So this 10 lakh is of course the present value, not the future value. On 31st March 2002, the Company X remeasured the provision for decommissioning to 30 lakh. So can you say, because in this 10 lakh will apply Ind AS 37. Now Ind AS 37 say the carrying amount will be calculated by adding the interest amount, and that interest amount will be calculated by using what? 10% discount rate, and every year the provisional amounts will be reassessed. So the amount may be changed. So any changes in the decommissioning liability, the accounting treatment of changes in decommissioning liability is given in appendix to Ind AS 16. Now what appendix to Ind AS 16 says that whenever the entity has opted cost model, so any increase in the liability will be added to the cost price of what? The related asset. Any decrease in liability will be deducted from the cost price of related asset if entity has opted cost model. So in this question they have given cost model only. Correct? Yes, sir. Provide necessary journal entry at the end of the year, that is 31st March 2002, for recording depreciation and decommissioning provision. So there will be 3 journal entry. First journal entry will be depreciation. So first journal entry will pass depreciation account debit to accumulated depreciation. Correct? So what is the cost? Cost is 1.5. So it will be 1.5 divided by what? 20 years. There is no residual value. So this will be how much? It will be 0.75 crore. It will be 0.075 crore. Understood? Or better, you can calculate in lakhs. Correct. So you can say it is what? How much? You can say 7.5 lakhs. It will be 7.5 lakhs. Understood? Then you need to add interest amount in decommissioning liability. So what will be journal entry? Journal entry will be interest expense transfer to PL to decommissioning liability, or you can say provision for decommissioning, or you can say decommissioning liability also. Correct. So that will be how much? 10 lakh into 10% means 1 lakh. 1 lakh. So once you pass this journal entry, the carrying amount of decommissioning liability will become 11 lakh, and then the reestimated value of decommissioning liability is 13 lakh. So there is an increase in the liability by 2 lakh. That will be added to the cost of what? Plant. So next journal entry will what? Plant account debit to provision. Plant account debit to provision, and that will be 2 lakh. These 3 journal entry we need to pass. Simple. I hope you have understood. Come to the solution. What they have given. You can see they have also given 3 journal entry. Depreciation to accumulated depreciation, interest expense to provision for decommissioning, and plant account debit to provision for decommissioning. Amount remain same. Simple. Normally what I have seen that student will pass journal entry without narration. If you are not giving narration, your marks will be deducted in exam. You can see in solution also they will provide narration. So always provide narration with journal entry, otherwise they may deduct marks in exam. Understood? Correct? Simple question. Question number 8 also you have understood. Correct? Now let us come to the next question, that is question number 9. Question number 9 is based on Ind AS 20. Very simple question. Similar question we have done in our classes. Super simple question. A Limited received a government grant of rupees 10 lakh to defray expenses for environmental protection. Expected environmental cost to be incurred is 3 lakh per annum for the next 5 years. How should A Limited present such grant related to income in his financial statement? Now, as per Ind AS 20, whenever the grant is related to income, so of course this grant is related to income. Grant related to income is grant is related to revenue expenditure. Correct? In this case, you can easily understand that grant is related to income. In that case, the grant is treated as deferred income and will be amortized to pay over the period to match the related expenses which they are intended to compensate. So of course, can you see in this case you can see the expected expenses of rupees 3 lakh per annum will be incurred in the next 5 years. It means, can I say, the grant will be amortized in the next 5 years on equal basis, that is 1/5 every year. So can I say the total grant is 10 lakh. So how much will be transferred to PL every year? So how much will be transferred PL every year will be equal to 10 lakh divided by 5, that is 2 lakh per annum. So 2 lakh per annum will be transferred to PL. Now what is the question? Question they have asked, how should the A Limited present such grant related to income in its financial statement? So Ind AS 20 has given two presentation method for such grant. So what Ind AS 20 says that either such grant can be disclosed separately or under the head other income in SOPL. Correct? So either it can be presented as a separate income or as an income under other income in your statement of PL, or such grant can be deducted from the expenses and net amount can be shown as an expense in SOPL. So they have given two presentation method. So of course that two presentation method can be applied. Understood? So what are the two presentation method? First presentation method, what we can do means, what we can do, if this is SOPL, so we can add on the grant as a separate income or under the head other income. Correct? So 2 lakh will be what? Grant income, and expense will be shown separately. You can add on environmental expenses, that is equal to 3 lakh. This is the first method. Second method, what we can do, will not present grant as a separate income. What will do, expense will be shown as a net amount. You can see expense will be shown as a net amount, that is 3 lakh minus 2 lakh, that is 1 lakh will be the net expense. So grant will be deducted from the expense and will be shown as a net amount in the SOPL. And so these are two methods prescribed under Ind AS 20. Both methods are acceptable from what? Ind AS 20 point of view. Very simple, similar answer has been given. If you want to read it. You can see as per Ind AS 20 accounting, as per Ind AS 20, accounting for government grant and disclosure of government assistance, grant related to income are presented as a part of PL either separately or under the heading other income. Alternatively, they are deducted in reporting the related expenses. In accordance with the above, presentation of grant related to income under both method would be shown as follows. They have given method 1, method 2. You can read it. Correct now? Simple. Any doubt? No doubt? Now let us come to the next question. Next question is question number 10. Question number 10 is based on Ind AS 116. Once again, new question, because similar question has not been given in ICAI study material. But I will say simple question. But then also in this question, there is one point which require attention. Means that point if we will not do right now, so it might happen for the similar point, same question if asked, you may do mistake. So attention is required. Correct? What is the question? How will entity Y account for the incentive in the following scenario? Scenario A, so they have given two scenarios, scenario A and scenario B. Entity Y lessee enter into an operating lease of property with entity X lessee for a 5-year term at a monthly rent of 1,10,000. What is the total month? Can I say total month will be 5 into 12, that is 60 month, and total lease payment, fixed lease payment will be 1,10,000 into 60, that is equal to 66 lakh. 66 lakh. Now, in order to induce entity X to enter into lease, entity Y provides 6 lakh to entity X at a lease commencement for lease improvement. So, some lease incentive was given by lessor to lessee, means paid by lessor to lessee, correct? Understood. To what Ind AS 116 says that if for that lease improvement the ownership belong to lessee, ownership belong to lessee. So you can see it is given that lease improvement, it is a lessee asset, means the control of such asset belong to what? Lessee. So whatever amount has been paid, whatever amount has been paid will not be recognized as property, plant and equipment, because the control of such asset belong to lessee. Therefore whatever amount has been paid by lessor to lessee will be deducted from total fixed lease payment, correct? So means lease payment will be equal to fixed lease payment less any lease incentive. You will deduct 6 lakh, you deduct 6 lakh and total lease payment will be 60 lakh. 60 lakh. Now what Ind AS 116 case says that in case of operating lease in the books of lessor, the total lease payment will be recognized as an income over the lease term. Over the lease term is over 60 months on SLM basis if there is no other appropriate method for amortization. In this case, because question is silent, it means there is no other appropriate method, therefore will recognize lease income on SLM basis. So total lease payment divided by 60 you will do. It means what is the monthly lease income? Monthly lease income will be 1 lakh. Monthly lease income will be 1 lakh. Understood? Have you understood this point? So what will be Jana entry? Jana entry, for Jana entry we can refer the solution. Can we refer the solution if you permit? Yes sir. So what they have given, let us check. You can see the similar information has been given. You can read it. You can read all this point. Journal entry for scenario A, what they have given. First they have paid some lease incentive. So that lease incentive will be considered as deferred payment. Correct now. We will pass one journal entry deferred lease incentive to cash 6 lakh. Correct. And then on monthly basis we'll pass journal entry because we need to recognize monthly lease income. So how much cash has been received? So cash received is 1,10,000. Out of that 1,10,000, my lease income on SLM basis will be 1 lakh. To lease income will be 1 lakh, and this 6 lakh, out of 6 lakh, 10,000 will be automatically adjusted. 10,000 means what? Divide by 60. So 10,000 will be adjusted on monthly basis. Understood? We will do 2 deferred lease incentive 10,000. This will be journal entry done, and every month this journal entry will repeat it. Understood? Scenario A is very simple. Correct? Come to scenario B. What they have given. Scenario B is similar point. But what they have given, let's see. Entity Y enter into an operating lease of property with entity X for a 5-year term on a monthly rent of 1,10,000. At lease commencement, entity Y provides 6 lakh to entity X for leasehold improvement, which will be owned by entity Y. Lesser asset means now this lease improvement will be under the control of lesser. Means whatever they are paying, that is for the acquisition of one type of asset. So this whatever payment has been made will not be recognized as a deferred payment, deferred lease incentive. It will be property, plant and equipment, and on that depreciation will be charged. On that depreciation will be charged, means Ind AS 16 will be applicable. The estimated useful life of leasehold improvement is 5 years. Means in this case total lease payment will be 60 lakh only. Total lease payment will be 60 lakh, and that will be recognized on SLM basis. Means how much lease income per month basis, that is 1,10,000, and we recognize a property, plant and equipment on commencement date only. So journal entry PP account debit to cash, and then whatever they have received, cash account debit lease income 1,10,000. Understood? I hope you have understood what journal entry. Let's see what they have given. Depreciation will be also charged on what? Property, plant and equipment. So what journal entry they have given? To record lease incentive, PP account debit to cash 6 lakh. Correct? Then cash account debit lease income 1,10,000. Then depreciation to accumulated depreciation. You will assume SLM basis. So it will be what? Divide by, if you are charging depreciation on monthly basis, it will be divided by 60. That is 10,000 monthly depreciation. Monthly depreciation. Understood? Have you understood? You can see recurring monthly journal entry they have given. You can give journal entry on yearly basis also. That is your choice. Correct? Because they have not given whether you need to pass journal entry on monthly basis or whether you need to pass journal entry on yearly basis. Understood? Have you understood this point? But payment here is done on monthly basis. Because of that reason they have done journal entry on monthly basis. Simple question. Simple question, understood? Now let us come to next question. Next question is question number 11, and that is based on India's 103. Can we come to that question? Yes, sir. Question 11. Yeah, very simple question. Similar question we have done in class also has been given in ICAI study matter. Very easy question. Only I need to read, and I will read the solution also. In October 2001, IHL acquired 75% of Very Relevant Limited by paying cash consideration of 0.80 million. The fair value of NCI on the date of acquisition is 0.20 million. The value of Very Relevant Limited identifiable net asset as per Ind AS 103 is 1.10 million. With respect to acquisition of Very Relevant Limited, determine the value of gain on bargain purchase when NCI is measured as per fair value method and proportionate share of net identifiable asset method. So of course in this case they have asked you to calculate goodwill or gain on bargain purchase either by measuring NCI at fair value or measuring NCI at proportionate share in INA method. So of course when we use fair value method we calculate full goodwill. Whenever we use proportionate share of INA method, then of course we calculate partial goodwill. Correct? Understood? They have said determine the value of gain on bargain purchase. Means one thing is clear that in this question there will be no goodwill, there will be what gain on bargain purchase. Correct now? So can we do with the solution only, because it is very similar question we have done. Correct now? So can we understand from solution? Yes sir. Correct. So first by using fair value method, so what is the fair value of consideration paid? 0.80. What is the fair value of NCI? 0.20. What is the total become 1 million. From this we deduct fair value of INA, that is also given 1.10. So this become gain on bargain purchase and this become full gain. This become full gain now. So this will be full gain. Just we say now full goodwill, so it is full gain. Understood? Now when NCI is measured by using proportionate share method as per proportionate share in INA method. Correct? So in this case we'll take fair value of consideration paid as it is whatever given, but now value of NCI will be based on proportionate share of INA. So what is INA? INA is 1.10 and NCI is equal to what? 25%, because they acquired 75% of equity shares of what? Subsidiary company. So 25% will do, so it becomes 0.275, total become 1.075. From this we deduct what? The fair value of INA. So this become gain on bargain purchase. So can I say this will be what? This will be partial gain. Partial gain, and this gain will be transferred to what? Capital reserve. Understood? Very simple calculation. Yes sir. Got it? Now can we come to next question? Next question is question number 12, which is based on Ind AS 41. Once again similar question we have done in what? Our previous classes. It is given in ICAI study material also. So what is the question? Fisheries Limited practices pisciculture in sweet water, pond, tank and dam. The fishing activity of Fisheries Limited in such sweet water consists only of catching the fishes. Comment whether such fishing activity will be covered within the scope of Ind AS 41. Means can I say in this question we need to prove that this catching of fishes, whether it will meet the definition of agriculture activities. Because if it will not meet the definition of agriculture activity, then it is not covered under Ind AS 41. So we need to understand what is the meaning of agriculture activity. So what Ind AS 41 says, the agriculture activity is a management by entity of biological transformation of biological acid and harvesting of biological acid for the purpose of sale, for conversion into additional biological acid, for conversion into additional agriculture produce, means for conversion into agriculture produce. Correct now? This is the meaning of what agriculture activities means. In this there are 2 points. Means any activity will become agriculture activity. It consists of 2 points. First, it must include management for biological transformation of biological acid. When I say biological transformation consists of what? Growth or degeneration or procreation. Correct now? It includes all these. Means there should be some transformation in biological acid. Are you getting? And as well as it must include the harvesting of what? Biological acid. Harvesting means what? Detachment of agriculture produce from biological acid or cessation of the life of biological acid. That is what? Nothing but harvesting. So in this case you can see when they are engaged in the catching of fishes only, so there is no biological transformation. Can I say when we catch fish, from sweet water, that is pond, tanks and dam. So it there is a natural growth of what fish. So we are not involved into biological transformation. Means there is no management by entity for biological transformation. They are only engaged in what fishing activity, which for catching the fishes. Means they are only engaged in harvesting activity. Therefore, can you say it will not meet the definition of what agriculture activity. Therefore, these activities will not be covered under India's 41, and India's 41 is not applicable. I hope you have understood correct now. Let's see what the answer has been given. You can see they have first defined the meaning of agriculture activities. Agriculture activities is the management by entity of biological transformation and harvest of biological asset for sale, for conversion into agriculture produce, for conversion into additional biological asset. Correct now. For fishing to qualify as agriculture activity must satisfy both the following conditions: management of biological transformation and harvesting of biological acid. So you can see they have also given the same thing. In this, fishing involves manage activity to grow and procreate fishes in designated areas. Such fishing is an agriculture activities. So when fishing involve both management of manage activity grow and procreate fishes in designated areas, such fishing will be what an agriculture activity. But in this above scenario, only fish harvesting is managed. Therefore, mere fish harvesting without management of biological transformation cannot be termed as agriculture activities. Hence, fishing in sweet water, where only fishing is carried out without any management of biological transformation, is outside the scope of India's 41. Understood? So, India's 41 is not applicable. Yes, sir. Got it? Correct. Any doubt? Understood? Now, can you come to next question? Next question is question 13 based on India's 32. What is the question? Let's see. State whether the following item meet the definition of financial asset or financial liability for entity. So of course, we have done the meaning of financial asset and financial liability under India's 32. Correct? Correct. Let's see. Let's apply the definition. Point number 1. A bank advances an entity a 5-year loan. Bank also provide the entity with an overdraft facility for a number of years. So can you say, in this case, there are two financial liability in the books of entity. Financial liability, it means there is a contractual obligation to pay cash or any other financial asset to the entity. It will meet the definition of financial liability. Correct now. So in this case, you can see the loan as well as bank overdraft will meet the definition of financial liability. Correct. So point number 1 is very much clear. Point number 2. Entity A own preference shares in entity B. Entity A own preference shares in entity B. The preference shares entitle entity A to dividend but not to any voting right. Now, can I say for entity A, because can I say it is nothing but one type of investment. So for entity A, there is no doubt it is a financial asset. Correct. Why it is a financial asset? Because even though it is equity instrument of other entity, it will be financial asset. Even though it is not an equity instrument of other entity, can I say there is a contractual obligation to receive cash. There is a contractual right to receive cash or any other financial asset from that entity, though it will meet the definition of financial asset. In the books of entity A, there is no doubt. Can I say it will be what? Financial asset? It will be a financial asset. But in case of entity B, can I say it may meet the definition of equity or it may meet the definition of financial liability depending upon the facts and circumstances. Means why I am saying it may be the definition of financial liability, because the question is not clear whether there is a contractual obligation to pay cash or not. So if there is a contractual obligation to pay cash or any other financial asset, then it will meet the definition of financial liability. Otherwise, it will be equity instrument. So in the books of entity B, it might be what? Financial liability, it might be equity instrument depending upon the facts and circumstances. Point number 3. An entity has a present obligation in respect of income tax due to prior year. So can I say income tax is a statutory obligation to pay? Under financial instrument, there is only contractual obligation is covered. So if there is a statutory obligation which is not because of any contract, that is not covered under India's 32, so it will not meet the definition of what? Financial liability. Correct. In a lawsuit brought against, Miss point number 4 we are doing, in a lawsuit brought against an entity, a group of people is seeking compensation for damage to the health as a result of land contamination believed to be caused by the waste from entity's production process. It is unclear whether the entity is the source of contamination since many entities operate in the same area and produce similar waste. So can I say this para is actually covered under India's 37. So there is no contractual obligation to pay compensation. There is no contractual obligation to pay compensation. So in this, India's 32 will not be applicable. Can I say in this provision might be created based on India's 37? Based on India's 37. Understood? I hope you have understood all 4 points. Understood? Correct? Yes, sir. Now let us come to the next question, that is question 14, and this will be the last question for this second session for RTP discussion. The other question whatever left will discuss what in the third session for the RTP discussion. Okay, so the question number 14 is based on India's 33. I will say good question, newly inserted question. Till now this type of question has not been given in ICAI study material. So therefore attention is required for particular one point which is for the first time they have asked in the questions. Okay, yes sir. So you need to pay attention for this question, because similar question if they ask in exam, you may do mistake if you do not consider this point before exam. Got it? Yes sir. Company P has both ordinary shares and equity classified preference shares. It is given that preference shares whatever is given in the question are equity classified. Correct? In issue, the reconciliation of number of shares during year 1 is set out below. You can see they have given dates, transaction, ordinary shares and preference shares. Now before I go to the other part of this question, let me ask one question to you, that when we say EPS, so EPS is for equity shares or equity instrument? Why I am asking this question? Because we need to calculate weighted average number of equity shares. So in that weighted average number of equity shares, should we consider only equity shares, or we should also consider preference shares which has been classified as equity to calculate the weighted average number of equity shares? I hope you are understanding. So can I say EPS means earning per equity share, it is not earning per equity instrument. So in this question, preference shares are equity instrument but they are not equity shares. So therefore to calculate weighted average number of equity shares will not consider the number of preference shares given in the question. Normally this type of doubt are asked in the class from me, therefore I have discussed this point. Correct? Now in this question they have also given treasury shares. This is the point where attention is required. Correct? Now what is treasury shares? In India there is no concept of treasury shares. I hope you have done buyback of equity shares in your CA inter both in Advanced Accounting and Companies Act, so you know all about buyback. Now as per Companies Act, whenever any company buy back their own equity shares, they need to cancel it immediately. Means such equity shares which have been bought back will be cancelled immediately and will not be held by the company for future purpose of reissue. Means such equity share cannot be reissued in future. Means once bought back will be cancelled forever, it cannot be reissued. But internationally there is a concept of treasury shares which say that any equity shares which can be bought back, it will, the cancellation of such bought back equity shares is not required and they can hold it for future purpose of reissue. Means in future year it can be reissued for any purpose. Understood? Such shares which has been bought back and held by the company for future purpose are known as treasury shares. Have you understood the meaning of treasury shares? However, this point is not applicable in India. Means one thing is clear, this question has been taken from international book. This question has been taken from international book. But whatever, whether it is cancelled or it is not cancelled, what India 32 says that the treasury share will be deducted from equity only. Means to calculate number of equity shares, we should deduct the number of treasury shares which are held by the company. Understood? Have you understood? Correct. Means what they want to say, you can see on first apply balance, opening balance they have given 30 lakh. Out of that 5 lakh has been bought back and held by the company. So what is the number of shares, number of equity shares held by company on opening that? Can I say it will be 25 lakh? For the purpose of EPS we should consider 25 lakh, not 30 lakh. Understood this point? Yes sir. Then on 15th April you can see bonus issue 5%. So 5% will be 1,50,000 minus 25,000, that is 1,25,000. Correct. Then on 1st May you can see they have repurchased of shares for cash. Means again they have done buyback during the year which is 2 lakh. So that 2 lakh will be deducted. That 2 lakh will be deducted. Understood. And on 1st November they have again done, they have done issue of shares for cash, that is 4 lakh. So this 4 lakh will be added. 4 lakh will be added. So what is the closing number of shares? Closing number of shares, they will come how much? You can see 25 lakh plus 1,25,000 minus 2 lakh plus 4 lakh is equal to 28 lakh 25,000. And you can see the this minus this will be also what, 28 lakh 50,000. And preference here you can see the opening balance and closing balance are same. Understood. So can I say you can use this information for calculation of weighted average number of equity shares? If you use this information, it means you are doing some mistake. I hope you have understood this point. Correct. Now they have given the following additional information relevant for year 1. Company's P's net profit for the year is 46 lakh. Now in this question it is given that preference shares are equity classified, not liability classified. If they are liability classified, then can I say the preference dividend on such preference shares will be calculated by applying EIR, means that will be dividend expense and that will be already deducted from net profit. So can I say, because these are equity classified, from these preference dividend is not yet deducted, and if you want to calculate net profit attributable to equity shareholder, we should deduct what, preference dividend from such net profit. Understood. So what they have given on 15 Feb, non-cumulative preference shares, non-cumulative preference dividend is 1.2 per share were declared. The dividend were paid on 15th March. Preference share do not participate in additional dividend with ordinary shares, means they are not participating preference shares. Understood. Now as per India's 33, what they say that if preference shares are non-cumulative, their dividend will be deducted only when it is declared, and is given the question that dividend has been declared, therefore we should deduct preference dividend from net profit to calculate net profit attributable to equity shareholders. Correct. So what will be the amount of preference dividend? It is 5 lakh into 1.20. So 5 lakh into 1.20 is 6 lakh, means your net profit available for equity shareholders will be what, 46 lakh minus 6 lakh. Correct. They have given one more point, dividend on non-cumulative preference share deductible for tax purpose. Correct. Now because this point is given in the question, we need to apply the information as it is given in the question. Correct. What they are giving, what they have given, dividend are tax deductible for tax purpose. It means, can I say, we should take the net amount, net of tax, the amount of preference dividend will be taken as net of tax. So we'll say 6 lakh into 70%, because tax rate is 30%. Correct. So we'll say 4 lakh 20,000 deducted. I hope you have understood. To net profit attributable to equity shareholders will be 46 minus 4.2 is equal to 41 lakh 80,000, 41 lakh 80,000. Understood this point? Correct. Now we need to calculate what, weighted average. So we can calculate weighted average. So weighted average will be 25 lakh, because it is outstanding from the beginning. We'll take 12 by 12, that will be 25 lakh. Yes sir. Then 1,25,000 is bonus shares. For bonus share, weight will be from the beginning only. We will take 12 by 12, that is 1,25,000 only. Then 2 lakh was bought back on 1st May. So we will take weight for 11 months. It will be 2 lakh into what, 11 divided by 12 is equal to what, 183333. This will be minus. And then 4 lakh was again issued on 1st November. We will take 4 lakh into November, December, January, February, March. It is 5 months. It will be 5 by 12. It will be 5 by 12. I hope you have understood this point. Have you understood this point? Bola re. Correct. Any doubt? No doubt. So this will be 4 lakh into 5 divided by 12 is equal to 166667. Total is coming how much? It is 25 lakh plus 1,25,000 minus 18,333 plus 166667 is equal to how much? Sorry, 25 lakh plus 1,25,000 minus 18,333 plus 1,66,667 is equal to how much? It is coming 26 lakh 8,334. Correct. This become weighted average number of equity shares. Now we can find out EPS. So EPS will be equal to 41 lakh 80,000 divided by what, 26 lakh 8,334. So that is coming how much? 41 lakh 80,000 divided by 26,08,334 is equal to how much? It is 1.60 per equity share. 1.60 per equity share. Understood? Good question, simple question. If you have understood the concept of treasury shares, understood, correct? Hope you have understood this much. So for today, this much only. Will once again come with the last session of RTP, in which we'll discuss the balance question of RTP. Understood? I hope whatever we have done today, you have understood all the question clearly, correct? And this will help you for your exam preparation, correct? Now, once again, I want to just inform you that whatever you have the requirement, means you want some concept to discuss which you have not understood, or you have a doubt for a particular concept, or you have a doubt for a particular question, just inform me in the comment box of this video. If I, of course, I will help you, and if it require a video, I'll come out with a video for that particular concept or questions, correct? So for May 2023 attempt, I'll be there for you, don't worry. Just whatever is your requirement, just inform me in the comment box of this video. Thank you very much for today. Meet you soon with a new video next time. Bye bye, take care, enjoy your life, enjoy your studies. Bye bye, take care.